All right, so thanks for joining me in today's video. What I want to do is share with you some thoughts and insights on how you can actually trade if you've got a full-time job, and how can you do that if you're working throughout the trading day. So how do we go ahead and execute those orders? So I'm going to share with you this concept of good till cancel orders, or setting up your orders the day before or night before and putting them through. Now, if you're still struggling with this, feel free to reach out and I can go ahead and help you out. I do offer coaching, one-on-one coaching sessions, which is what a lot of people do with me. And then also for 6 months plus, where I work with people one-on-one to really get them to understand how to trade, invest, work platforms, and that kind of thing. Along with, there's a lot of other classes. Just visit our website at tradersfly.com. And you can get more insight and details there by visiting our website. Okay, all the links also should be in the description below. Let's get started. I want to show you this concept here and how you might go ahead and do that. So let's say you're working throughout the day and you just can't get to trading. So what do? You go home at night. You're like, oh, well, the market's not open. So what can I do? Well, you could go ahead and put on trades in the same way that you could put on stock trades. Like, let's say if I was interested in purchasing shares of Tesla, and I say, oh, no, I'm missing the move right now. So what I could do is say, well, if it gets down to 700, 680, 660, 650, I'll buy a few more shares. So how do you execute something like this? So I'll show you first with the stock basis, and then we could go ahead and do the same thing from a trade basis when we're trading like a vertical spread or just an option spread. The concept is no different. So current price of Tesla is 737. So what I can do is go ahead and right click and say, okay, current price is 737, but I say, I already missed the move. So I'll just go ahead and say, I'll buy this. So you could say, okay, well, I'll buy, let's just say I'm going to go with 5 shares. So I'll buy 5 shares of Tesla. Right now, current price is 735. Let's say when it gets down to 698, okay? Now, the time for this order is good for the day, but I can say good till cancel. So this could be in for the next week. And I might get those shares. So I'll go ahead and hit confirm and send. And now it's going to be in there. So boom, it is there. So now that order is waiting for the price to come to me. I am waiting for that price to come to 698. When it gets there, I will get that stock. I will get 5 shares. Now I could go ahead and add to this. So let's go ahead and do a bunch of these. I could set up a ton of these things. So I'll go ahead and buy 5 more shares. So let me go ahead and do another 5 lot. I could even change this to blast all. So check out this cool thing. So look, I've got a current price of 735, but I could duplicate this order, duplicate that order, duplicate that order. So I've got this order duplicated. So now what I can do is put in a price. So I could say, hey, when it gets to 680, when it gets down to 660, I'll get some more. When it gets down to 637 and 15 cents, when it gets down to 621 and 74 cents, I'll get some there. And I'll change them all good till cancel. So now those orders will be sitting there until I am ready, and until when the price gets there, then I will get those shares. So boom, now I've got these orders right there sitting, working for me, they're working. And right there, I'm waiting for those prices to come to me. Now, the current price is 735.11 or 735.45. But when the price gets down into those levels, I will buy a few shares. So I'll buy a few shares, buy a few shares, buy a few shares. So what you could do as a working person is you could do this at night after work or in the morning before you leave. And you can set up some of the orders of what makes sense for either for the day or for the week and put those orders in. So you could do it with stock. You saw here how I did it with the stock. But I could do the same thing with the option prices. Now, a little bit of the disclaimer here with option prices. Remember, there's theta decay and time decay. So the value of those options will and can shift quite a bit depending on how many days have went by. So if there's 4 days that went by or 10 days that went by, the value of those options will be quite a bit different. So you need to be a little bit more careful when doing those spreads. But from a simplistic perspective, like let's say I want to go ahead and do remember, some days will go by. Let's say I want to make sure I get into this option trade in the next couple of days, and I do a 42-day option. So by the time it gets to 35 days, maybe I will get it. But what I'm trying to do is, buy low, sell high. So if I go ahead and sell put options, I could go ahead and sell high and buy low. Or if I'm a buyer, I buy low and sell high. So let's say we're just taking a simple vertical approach. So I will buy some verticals. I'll buy one at the money, buy a vertical, Okay. And let's say I want to buy one at the money. Okay, so here's my vertical. Let's go here. I'll get rid of the shares that I have. I want to buy one at the money, but I want to buy one more closer to at the money at about 710. Okay, right now price is 735. Well, if I want to buy one around 710, this vertical, well, look at what the vertical is trading. A $10 wide spread is trading for about a $5.08, 508. Okay, so I'll go to about a 710 now. So if this gets to at the money, it should be worth about the same. So I go to 710 and I'll go to 720. Okay, and look, current price is 608. So I want to say, okay, when it gets to 508, boom, that spread will then be about the same amount up and down. So it'll be about at that point where it'll be kind of like at the 50-50 or at the money spread. So I could say, okay, well, I'll pay about that 508 when it gets to that price range. So by the time it gets to about 710, 712, it should be about 508. Okay, because right now that spread, if I unlock it, is 608. It's because it's more expensive because it's actually more like selling a put vertical. So it's more pricey because I have this in my favor. But if I take off $1, right, as the stock pulls back, okay, right down here, somewhere around here, it should give it to me. And then somewhere around this zone, depending on how many days go by, I'll be able to get that. So now what I could do is go confirm and send. Okay, send that order in. And you can see I have that vertical right there. Now, current price is 607. I'm trying to get it for 508. It's only good for the day. I'll cancel and replace that order. Okay, now I'll change it to good till cancel. Send that order in. And now that'll sit there for a few days. So every couple of days, I could go in and check onto that spread and see if it gets filled. Okay, you could do it every night. You could just double check it and you could say, hey, well, I'll just move my price a little bit lower or higher. If you're doing it for the day, you know, in the morning, like let's say you're doing it in the morning, then you might actually just do it a little bit closer up and you say, hey, before I leave, let me check this out. Okay, current price is, let's say I'm over here and I'm just doing it for the morning. Let's do something like this. Okay. Then instead of 558, why don't I go to like maybe 525? And if it pulls back, I'll get in it. So you could set it something less extreme. You know, I went ahead by a full $1 off, but in your case, if you're just doing it for the day or two, if it pulls back by about $20, then you could get into the stock. On the other hand, if you're selling put verticals, you could do the same thing, but a little bit opposite. So let's say I'm selling a put vertical over here. So 620 and 610 or so. Okay. So rather than going in right here and selling for 47 cents, if this starts pulling back, I should get more premium and credit, right? So what I want to do is sell it for maybe, let's say 85 cents, okay? Or about, let's go for $1.05. So you could start selling it for something like this. So now if it pulls back quite a bit, you might be able to, you know, get and sell that put spread for more money. And again, you do the same thing, send in the order and so on. But remember, when these things now are pulling back, it may continue to sell off. You might get filled, but you're not there for the day. And then later on, you'll see it, even though you might have gotten filled here, current prices here, you might actually appear to be down money the first day or two. But that's okay because you're like, hey, I put on one contract or two, and then you could put on another one later. So by having a full-time job, it allows you to set these orders up. You know, you could check on them when you get back and then set another order in or multiple orders in for the next day and the next day and the next day. So that's how you could do it if you got a full-time job, that you could set these orders up and let them come to you rather than you chasing the orders, trying to get in them when the price is moving. So you don't really have to watch them. Let the orders sit and let them work for you. Anyways, I hope that helps, gives you some insight on trading these options. If you've got a full-time job, this is how you would do it and execute it. I've got a lot of people that I've worked with that, you know, do things like this where they put the good till cancel orders in. I just let them sit. They check on them once a day, maybe at the end of the day or some in the morning. Some of them do it every couple of days. They check in like Monday, Wednesday, Friday. So everybody's a little different. But the point is that you're able to still do these orders and trades if you go ahead and set them up accordingly. And sometimes you'll get filled, sometimes you won't. So it's just putting them in and letting that trade come to you. And when it comes to you, you might get filled and executed. And then you have to give that trade time and room to kind of work and wiggle. So anyways, I hope that helps. Thanks for joining me, and I'll see you in the next video.